This is the MTPredictor weekly market update for September 3rd. Um, we're looking at the weekly the S&P future here. And again, we are at a point, we're at minimum wave 5. We've hit that target a few weeks ago. Market could certainly correct from here. It's interesting now we kind of got the summer out of the way. September traders should come back, volume should come back. We just got a Fed meeting at Jackson Hole, Wyoming. QE3 is still on the table. I am hearing things that there may be something much bigger in the works. In other words, a coordinated effort between all the central banks around the world, since this is really now a global problem. And there'll be some type of stimulus, coordinated stimulus. We'll have to wait and see. That may come, ECB's got some decisions to make here shortly. It could come after the election. Maybe the Fed doesn't want it politicized. We'll see. But just be aware that that's potentially out there. And certainly that could affect the markets. Maybe continue to inflate asset prices, if you will. And if you don't think asset prices are inflated, you can take a look at something like the this is courtesy cycle charts, but the Dow priced in terms of commodities. So instead of pricing the Dow in terms of paper money, US dollars, when you price the Dow in commodities, you see since basically the tech bubble, the Dow is crashing in terms when you compare it to a basket of commodities. And that's what happens is commodities tend to assert themselves in an inflationary environment. So you can kind of get the picture there. Also, I noticed this was a 13F filing with the SEC from the Soros fund, and basically talks about they unloaded much of their bank stocks, like your Goldman Sachs, chief among them, and some others, and they were buying gold. All right, if we look at, I'll kind of pop over quickly here, just looking at silver here as a daily chart of silver, because we've been watching this for quite a while here because we had about 14 weeks of consolidation and this kind of pennant forming in both gold and silver. And you can see, well, we finally did, we got a close above that area on the 21st of August, and then that high got taken out. We're next in this decision point off of the last swing here, that resistance area, and they've gotten a close above that now. And so we'll see if this next high gets taken out. 32, you can see the kind of consolidation back here around that 32 area, so that'll be a challenge for silver. But if it takes that out, we should see the next decision point off of this prior swing here. Let's clear that off, and you can see just taking a decision point using the tools and the software here. Just above $34 would be the next stop if they can take out 32 now. So just interesting, and we can peek at gold. I'm going to take a look at the weekly chart here of gold. And you can see the same breakout here on the weekly chart of silver. The weekly break here, and that's been traded above. So gold, now the December contract here. Again, you can see that that little pennant triangle, if you will, that had formed, broken out of, got a close above that high, got taken out. All right, if we look at the daily chart just for a second, you can see it's gone wave 3, so won't be surprised if we do get a pullback into wave 4, which would be in this area in gold, around 1655, 1654 area. and then we'll see if that support holds, and then get the next leg up. So we'll keep an eye on that. Let's take a look at oil on the daily chart here. Another little ABC pattern is shown up here on oil. You can see that entry would be at 95.80 with the target all the way down at 77.10. But you want to take a decision point off of this B swing here, just above 80 or just below $86. There's strength on the STF here to the upside, so maybe not done to the upside. That $100 level is another kind of natural support resistance area. But let's just look at the weekly chart. We saw that it was double bottomed here, and you're in this wave 2 or B, we'll call it wave B here, resistance area. It goes all the way up over 105, and it's still in that resistance area on the weekly chart. Yeah, we'll see what transpires here in oil. Again, see if it's going to assert its value some more here. Let's go back to our S&P. Got a little off track there, but anyway, this is the stuff that's going on kind of behind the scenes. You know, I've heard some. I was looking at Morgan Stanley because I've heard now that this company may be in trouble. It's had a pretty good run over the last month or so. This is the weekly chart, and you can see it's had a rally into this wave C. Is a TS3 sell at 1417 with a target of $10.18. So it hasn't been executed. Needs to get to 1417. If it takes out the high there at 1535 first, then all bets are off there. And but it'll be interesting to see how that plays out after that week or month of rally in the stock there. But keep an eye on that one, because I'm hearing that company may be in some trouble. We'll see. Again, we're paying attention to the S&P or the ES here in minimum wave 5, because if we go back where this decision point was, we had a 5-wave pattern. That correction came at the minimum wave 5 target area. Okay, if we go back even further, again, 5 waves up right into this minimum wave 5 resistance area before we get the correction again back to the wave 4 DP, which is the tendency. And I think I probably showed this a number of times, but even in the crash where the bottom came in here, excuse me, in 2009, March lows of 2009, whoops, that's the trade setup. Let's put the analysis on here. That also was a 5-wave pattern down into the minimum wave 5 target. So the ES is really like these wave 5, minimum wave 5 targets, and that's why we want to pay attention, because we're at one now. You know, we did get some selling. You see the red sellers candles where the sellers have been overcoming the buyers in this resistance area. If we go to the daily chart, and the reason I'm thinking we may be in store for some more upside, at least maybe another leg. Alright, we've got some wave 4 support. We've got a little wave 4 pattern in here. We could go lower before we actually get into the support area, just above 1380. Right, but we can project up wave 5. And I don't know which way this is going to go, but I do think if we do get up here into this minimum wave 5 on the daily chart, then I may be looking at maybe some puts or something here. Nothing big, just to get a taste, just in case. So we'll see how that plays out. We could go lower, like we saw the support area is a bit lower. So we could maybe do a little ABC pattern into wave 4. If we do, we could get a nice TS set up for one last leg up at least. Again, we're coming into that time of year, heading into September, October, November, where markets, we've seen some nice healthy corrections, some crashes during this period, and the market is setting up to do that. What we've got though is this QE out there, whether it takes the form of QE3 or something bigger, like some type of coordinated effort, like we talked about earlier. Don't know, but that certainly could change things, and we'd have to reevaluate. But as far as gold and silver, like I talked about, I did purchase more silver. Was it last week or the week before? Because at any rate, if there's going to be more money printing, those commodities should assert their value, and I don't think we've seen the highs at gold and silver by any means. If they continue to create the money worldwide, because over history, over time, gold and silver will also assert themselves based on all the fiat money that's out there. And if you think the 80s was something, well, think about that. You've got all the central banks printing around the world. This time, the whole world is on a fiat currency, or fiat money, and actually fiat currency, I should say. Currency is not money. And as Mike Maloney says, there's a different mindset today. There's a more investor mindset today than there was in the 80s. More people are investing, aware of their investments for retirement and so forth. And also, the world was not all the world was not able to participate in buying gold and silver back in 1980 and the 70s and so forth. Russians couldn't buy, or the Soviet Union, India couldn't buy, China. It was basically the U.S. and parts in Europe. So now you've got a gold silver exchange in China. They're encouraging their citizens to purchase gold and silver. Russia can buy gold and silver now. India. So it's a different picture. So it should be interesting. But anyway, keep your eye on these things. It'll be good to get back to hopefully some more volume in the markets, and things get volatile, whether the market is crashing or continues to move higher. There's money to be made intraday for some nice moves, and then bigger picture stuff. Like I said, you can position yourself to take advantage of some of the cyclical things that are going on here. All right, so we'll take a peek at things next week and see what's going on. Until then, have a great trading week.